This is What Does It Profit? And I'm your host, Dr. Dawn Carpenter. Each week in this podcast, I'll talk to some of the leading thinkers and researchers, entrepreneurs and executives about things like conscious capitalism, sustainability, and business ethics, things that feel all the more urgent as we as a planet face enormous challenges: climate change, pandemics, demands for social reform. Many of these challenges brought about, some would argue, by capitalism. Each episode, each guest, will bring me a little closer to finding out what does it profit. Here we are staring down the end of 2020, and it's safe to say that, like me, many of you are glad to see it coming to an end. But you have to admit, 2020 has been a wild year. A global pandemic, rancorous politics, civil unrest, just to mention a few of the highlights. But before you think our conversation is headed to despair, I'm choosing to look forward. Look forward to better days. And they're coming. Hell, we just got our first female Secretary of the Treasury, Senate willing. Notwithstanding world events, though, this is the time of year I start to gear up for my spring finance class, where about 40 graduate students are subjected to a weekly dose of finance mojo songs and lectures about discounted cash flows. But we're not going there today. But where we are going is to a conversation with a woman who has a deep passion for reinventing finance and who believes that financial products should be simple to understand, offer the best possible returns, and make us feel good about where our money sleeps at night. Our guest today, Cat Berman, is a former managing director at Charles Schwab, who woke up one day rattled when she realized that Americans are sitting on over $300 billion in just-in-case cash. And we have a financial services industry that offers fairly crappy savings products. Cat is the co-founder and CEO of CNote, an investment platform that takes the money idling in our savings accounts and puts it to work in community development financial institutions, or what we call CDFIs, whose mission and business is to invest in disinvested, low-income communities and in women and minority-led businesses. Kat's here today with us to discuss how easy it is for all of us to invest in our values while using savings products that exceed the industry norms. Cat Berman, welcome to What Does It Profit podcast. How are you today?
I am well. Thanks for having me.
Oh, no, thank you for coming. We're going to talk about something today that I think is not talked about enough. Those of us out there in the world who care about the impact of business in society and putting our values in line with our investments have this idea of what impact investing is all about. But today I want to talk about an aspect of that, which I think you guys do a great job with at CNote. It's this idea of democratizing impact investing. Kat, what does that mean for you?
Yeah, I think there's two parts of it that are really important to us. One is the notion that we should all have access to financial freedom or economic independence. And that should be regardless of who your parents are, what zip code you were born into, right? The opportunity to really experience economic security, right, should be available to all Americans. And that's something that is just not the case today as the wealth gap, or I like to say the wealth chasm, continues to grow. And so that economic freedom should be democratized. And then the second piece is, how do we get there, right? If there's a shared belief that everyone should have a chance at economic opportunity, who's responsible for that? Is that government's role? Is that the nonprofit's role? And so at CNote, we actually think it's all of our responsibility, and that, if given the option, many of us would choose to invest in a more equitable society if it was available. And so that's what we do at our company, is we use our investment, the power of our investments, to really close the wealth gap and create more economic opportunity for all.
Well, I think that's really important because oftentimes we will think about these types of issues in the context of there being a pay gap or an income gap. But you use this term wealth gap. Tell our listeners how you understand that.
Sure. So, we look at some of the figures of things like net worth. And today we know that the average net worth of a Black family in the United States is significantly lower. And in fact, the average net worth of a white family has been seen 10x more than that average Black family. And so when you think about that, how could it be that both hardworking families, right, are living this reality in the United States, and yet that average net worth is 10x more simply because of the color of that white family's skin is just unacceptable. And so when we look at those figures and we see some of the reasons, right, for that, we understand that there's a lot we can do, both from a systemic planning and addressing element, but also from just an individual call to action that we can take to help close that wealth gap and make sure that families and individuals, regardless of color of the skin or background, have an opportunity to do things like start their own business, which we know is a creator of economic freedom, own their first home, which we know is a creator of economic opportunity, and other things like that.
Yeah, so I see really what you guys are doing at CNote as kind of a two-pronged process. You're helping to fund entrepreneurial activity, which helps to close this chasm, as you say, but also gives opportunities for those who'd like to invest, like to see their money invested in places that are very productive, but may not necessarily reach a hurdle that would allow them to have access to asset classes that those of means and wealth have available to them.
Yep, correct.
So your organization or your company has three primary products. Tell us a little bit about how that was developed. One of the things I get excited about with your company is this idea that you're co-creators with your CDFI partners. Explain to us how you develop the investment products that you offer.
Absolutely. And I'm actually also happy to share that we've added a fourth product since since we have
Fantastic.
initially engaged, which is really COVID related. And this gets back to the heart of your wonderful question around co-creation. We've always been a believer, and by we, I mean me, my co-founder, who's also a woman, in our incredible team. We've always been a believer that financial products, especially those that are seeking to deliver impact, should never be created in some closed boardroom by a bunch of people sitting around a desk saying, what do we think a community needs? And yet that's what we've seen time and time again over the years, is that often with just traditional financial products, we often don't, take the end investor in mind. But certainly with impact products, unfortunately, we've seen some of that to be true as well. And so out of the gate at CNote, what we did is we reached out to inspiring CDFIs across the country. Two of our first ones I'll name drop because we're just so grateful for their amazing wisdom would be ones like CDC Small Business in California and Pursuit over in New York. And these are just tried and true experienced CDFIs who've been fighting for community prosperity for years, and sitting down with organizations like that to say, what do you need? What does your community need? What's the type of capital that would be most helpful? What are the terms that would really drive impact? And then how do we get it to you? And that's really where we started our co-creation journey with CDFIs, and continue to. Every product you see on our site was co-created with the industry to be as impactful as possible. And I would say that journey never ends. Truthfully, we're always reaching out to our CDFI partners to say, how's it going? How, is this capital helpful? The latest product that we created is called the Rapid Response Fund. And this is very much for those of us listening who care deeply about our small business community. So you think about, all of the lives this pandemic has touched. First and foremost, the health impact that is just devastating. And then secondly, the economic impact that's hurting our families and our institutions. And the small businesses, right? Many of whom, these owners who poured their livelihood into creating that business to serve us, the community members, and others struggling to keep it afloat. And so we created the Rapid Response Fund to fund those small businesses, to make sure that the small businesses in both our local communities, but also nationwide, could get the patient capital, the patient flexible capital to really survive and then thrive coming out of this pandemic.
So what type of lending comes out of this Rapid Response Fund? What do these small businesses need?
Yeah, well, what we heard again and again and again from our community partners was, please make it patient, please make it flexible. So patient means long-term, right? Don't lend them, money and ask for it in 90 days. It's going to take time to rebuild, right? And so whether it's a restaurant or whether it's a dry cleaner, whether it's a bakery, these businesses are going to need time to restock inventory, to get revenue back up. And so this product in particular is a 5-year note. So you are investing in the strength of your communities, not one-off, right? Where, over 90 days, hopefully it'll help. But literally, it's a wonderful kind of time horizon you're given this business to rebuild. So it's a 5-year note, and then the return is 1%, which means really low cost capital to those communities. So that when they think about how they're going to stay afloat and how they're going to rebuild, there's not the pressure of incurring weighty, high cost debt.
Well, from an investor's perspective, that sounds like a concessionary rate. Is this by design for those investors who just believe in the need and lack of access for these types of companies?
It is. It is. And it's a great distinction. As you probably know, out of the gate, we've always had competitive products. So most of our products on our website and for our institutional partners really always tried to meet or beat market rate. And we think that's important, right? Because we want to help you not just make an impact, but also reach your financial goals. This product is very unique because of the time in history we are, where we realized there were a lot of investors who wanted to respond to this need for small business relief and were absolutely impact first. They came to us and said, we're already operating in a low interest rate environment. I'm not looking for that, high return in this environment. I'm looking to do something deeply meaningful with this money right now. And that's really where this more unusual but deeply impactful kind of return idea came from.
Well, for those listeners who are interested in the idea of putting their sleepy capital to work, if you will, and are looking at savings accounts at less than 100 basis points, you look at something like your flagship fund, and it seems like a pretty good deal.
Yeah, I mean, I put a lot of the kudos on the CDFI industry, right? I mean, I think for those who know or are learning about CDFIs, they have for years shown us how strong they are around delivering capital preservation and returns again and again and again. And so you have the flagship fund, which to your point, in such a low interest rate environment is able to provide a 2.75% return. You also have our promise account, which we're really proud of, which is a cash solution, right? And at a time where most of us listening, our traditional cash account, whether it's your bank account or your checking account, right? Savings or checking, probably giving you around 10 bips on that money. We're able to
Maybe.
provide much higher than that while putting all that money into CDFI banks and low income designated credit unions. So, I say this to share there's just such an opportunity to do meaningful things with your money right now, whether you care about return first or impact first.
Well, tell us about the Wisdom Fund and the connection with what you're trying to encourage with Black female entrepreneurs.
Absolutely. We have so much excitement and just so much to do around the Wisdom Fund because it's both a racial equity and gender lens statement. So, the Wisdom Fund is about wealth creation for women of color. So, how do we think about mobilizing not just, entrepreneurial dollars, but really combating that cycle for women entrepreneurs? We know that women of color are the fastest growing segment of entrepreneurship, but we also know they get a fraction of the lending dollars and of the capital that's available. And so that's really what this product is about. Every dollar goes to women entrepreneurs. And what's really fun about this product is it's not just about the capital, it's about everything around it. And so, for example, a woman benefiting from these dollars will not only get the fair cost of capital and this, patient loan, but she'll also get free technical assistance from her CDFI partners. And then she'll also be part of a larger Wisdom Fund collaboration initiative that we're doing involving human-centered design. And so for those of you who are familiar, HCD is this wonderful way of rethinking products and services through the lens of the person who's actually going to use it. And what we realized in our journey is that so many of the financial products that our community members are using were never designed with their voice in mind. And so how do we break that cycle? And so the Wisdom Fund is a great example where as part of this journey, these women are not only getting access to capital, but they're also getting to help us redesign what financial products look like for women. And how does their unique story, their unique journey, suggest and inform what these products should look like moving forward.
Well, Kat, tell us a little bit more about your origin story. I mean, you're talking about innovations in financial services having come from a place that is pretty mainstream. Me having come from JP Morgan, you from Charles Schwab, how did we get to where we are? Well, I don't know. Well, I'll tell my own story some other time. I want to hear
Yeah,
yours.
I love your story as well. So, not surprised that the two of us are together. Funny enough, the idea of economic justice and social justice has actually run through my veins from day one. I think it just has manifested in my career through a variety of places. And so, I came from an immigrant family. My mom came over here from Argentina and was very much the story, right? That American dream story. So they had to flee Argentina from persecution and arrived in this country very poor, struggling. And the way they made it in this country was entrepreneurship, pure and simple. My abuelo started with a bodega, certainly had plenty of failure stories, but ended up really finding his strength in entrepreneurship. And that's how he was able to create livelihood and a strong foundation for my mother and that side of the family growing up.
Cat, my dad owned a bar.
Ah, there you go. You know, so many of us, right, have those entrepreneurial roots. And so I always heard those stories from my mom growing up about, when she was a kid, having to just meet some of the most awful conditions of what it's like to live in, low income or poverty stricken United States. And then what it was like when they got to buy their first home and what a change that was in one generation. And so I think those stories really informed who I am and what I believe. And so not surprisingly, as I, grew into finance and really started to love finance, I just struggled with the fact that we kept using finance for the same
Making rich
purpose
people richer, right?
to make wealthy
Yeah.
people wealthier. Yeah, exactly. And so I thought the tool of finance in itself wasn't nefarious, and that we could really get creative about using finance as an instrument for change. And that's what led me to this journey, starting CNote.
Well, do you have any favorite stories about some of the impact that these funding sources have enabled CDFIs to do? This is my favorite part of what you do.
We have so many stories. I'll just share a few, but I could talk for hours because that is, our favorite part as well. So I'll start one with just an incredibly inspiring man named Jamar Kirk out of Minnesota, who he himself struggled, right, with a lot of the inequity that we're talking about here. So African American gentleman who grew up, really facing the issues of crime and drug abuse and neglect that I think a lot of kids in inner city communities face throughout our country. And so, he was very fortunate that he actually ended up, finding a strong group of friends and mentors later in his life. And so did not fall into the fate that several of his peers had, which ended up, without a job or perhaps incarcerated. And so Jamar, to give back, ended up creating this beautiful organization called Cycles Broken, which was all about mentorship and life coaching for youth who are in similar positions. And so you think about someone like that who, there's so many different paths that Jamar's journey could have taken, but he ended up, just having so many amazing discoveries and blessings and wanted to give back. And so when someone like Jamar, who really is starting an organization to help other youth get back on their feet, get out of a life of crime, and really, find a way to be sustainable, economically independent, and productive, tries to grow an organization like that, you'd think people would be falling out of the rooftop trying to support him. But yet, time and time again, he could not get funding from traditional institutions to grow this beautiful organization called Cycles Broken.
Now, Kat, was that because, I put on my former lender hat? I mean, there's no collateral, there's insufficient track record of revenue. I mean, the kind of the typical things that a banker would look to underwrite was that his problem?
Yeah, and I think the issue, as is you usually don't ever get to know, right? Is unfortunately in the banker's cycle, there's a credit box, and certainly that could be one of the reasons. Is the parameters of that underwriter were so strict that Jamar was never going to fit. Could also be that institution, right, that just doesn't do the type of small business lending that he was looking to do, and then it could also be issues of unconscious or conscious bias, which we all know exist in our financial system. So, pick your flavor. And unfortunately, I think for Jamar and others, they never quite get to know why. They just get the no. And so he ended up, fortunately, instead of giving up, he ended up going to one of our CDFI partners based in Duluth called the Entrepreneur Fund. And it's really at the Entrepreneur Fund where he got the loan to really help Cycles Broken take off. That was used to purchase things like laptops and other equipment, and then also give him really important technical assistance, right? And I think that's one of the things Jamar references was a game changer for him, because it wasn't just about the money when you worked with a CDFI. It was also about having a business coach who can talk about, here's how you grow your team, here's how you contract with new workers. And so that was instrumental. And so if you think about the net effects of that, right? You think about, okay, so I'm a CNote investor. I put money into this account, hoping it does some good. It ends up in the hands of Jamar. That investment is not just about investing in someone inspiring like Jamar, because now you have the net effect of all of the lives that Jamar now gets to affect, right? All of the individuals that he is getting back on their feet, right? That he's being that critical mentor to, that critical coach to change their life like his life was chosen. And so we see that a lot in our CNote stories, is that the investment you make is often much bigger than just that one person or that one project. So many of these have a net effect that is really a community play, that is a ripple effect in terms of the type of impact you can have.
Oh, and it's a wonderful segue to this idea, that is the hallmark of our show. What does it profit? Think about all the profit and dividend derived out of this type of economic activity.
Exactly. Exactly. And again, I have countless stories where you get that net effect. It's not just about even that one investment, although even just making an investment in someone like Jamar, you should be proud of, but it's even bigger than that, right? Because all of the good that Cycles Broken continues to do. I'd say the other story, I mean, again, like I said, I've got, how much time do you have? But the other fun one I like to share is from Jameen Moten over in Atlanta, who started a great security firm called Skylar. And Jameen is this wonderful story because she is a powerhouse. If you ever meet her, she is just amazing presence. She was a very successful athlete early in her journey. And so when she went out to start her firm, I mean, she said, I'm going to be successful. I know this is going to go well. Yeah, she'd been working in the security industry and realized that there's a hole in the market, that most of the security firms around her were really, they could be fine in terms of security, but were horrible on customer service and support. And so, like a smart entrepreneur, she saw a gap in the market, and she has, great ambition and went after it. So she takes this great idea and her great experience in the industry and goes to visit her local banks to get her loan to start her business. And again, gets declined and declined and declined and declined. And so fortunately, Jameen also went to one of our CDFI partners in Atlanta, ACE, and they did actually approve her loan and work with her, giving her that fair capital and that really wonderful technical assistance. And not surprisingly, for most of us hearing, she was successful. She did well. The last time we got in touch with her, she was at over $1 million in revenue. She was securing major sporting events in and around Atlanta. I mean, she's doing great. And back to kind of the net effects is when you make these types of investments, you're not just investing in Jameen, you're investing in her business, and you're investing in all the jobs she's creating in that African American community. And so we look at those just inspiring entrepreneurs, in admiration of their dream, in admiration of how they're building their communities, and also grateful that we got to be part of their journey.
Well, you talk about a securities firm. The bells chime off in my head again. The banker genes. I think of securities. I mean, you have financial instruments that you are selling to investors. What type of security do investors in CNote have?
Yeah, so we usually come back with understanding the CDFI industry. So, like all investments, right? And I always like to say, I am not a registered investment advisor. So, we share this in the spirit of information. Like all investments, there is risk expected. So, unless you're investing in the Promise account, which is our FDIC insured cash solution, you should treat all CNote investments as an investment. Now, the other piece of that is really understanding the CDFI industry. And just to give one data point, over its history, the average loss rate for the CDFI industry is less than 1%. So I shared that with audience members so they can get a sense of, even though we're talking about an industry that is perceived as, maybe more fringe or non-traditional because of the borrowers, the capital preservation that has been historic in CDFIs is really impressive. And one of the things that we're most proud of sharing as we talk about that industry. And so with all of our investments, obviously you're investing in a diversified pool CDFIs, and all of the CDFIs that are underlying your investments are curated and underwritten. And so to give you a sense of what that looks like, we at CNote, since inception, have had 0 losses and 0 defaults on any of our products. But like I said, I always encourage folks to really do their homework to understand what's in the portfolio and be comfortable with the CDFI industry as it is an investment.
Well, I can tell you for certain that our audience are not bank examiners, but I can vouch for the fact that this is extraordinary performance. If our colleagues in the traditional corporate banking sector had this type of default rate, no one would believe it because it just doesn't happen.
Yeah, like I said, kudos. There's so many reasons we are fans of CDFIs, but they really are so strong at finding and working with these amazing borrowers and repayment.
So when putting CNote together, it was this desire to fill a niche both in the market for entrepreneurs that have challenging times getting financing, but it's also democratizing the ability to be an impactful investor to investors. So you kind of have this twofold benefit. But how did it come together? What's your origin story? I have this image in my mind that there's this technological wizardry happening behind the scenes.
It really was during my time at Schwab, working in traditional financial institutions and lovely people I got to work with at Schwab. But I really was so conscious of the rising wealth disparity happening in this country and frankly outside my own window in San Francisco. And so it was very hard for me to just stand on the sidelines and not do anything about it. At the same time, I had a dear friend and colleague, Yulia Tarasova, who I had been talking to for years about these types of issues. Yulia had been working on Wall Street and running a $10 billion risk management function, when we first connected, and then ultimately ended up using her power and brilliance in finance for good by becoming a Global Acumen Fellow. And if you're familiar with that fellowship, it's a very exclusive fellowship that is where these, bright minds are sent all around the world to address issues of financial injustice. And so when Yulia got back from her fellowship, we reconnected and we're talking about some of these issues of wealth inequality. And we started brainstorming and said, gosh, there's got to be something we can do, right? We both really enjoy finance. We both care so deeply about this issue. There's got to be something there we can do. And so that's really where the brainstorm started. I had been a fan of CDFIs for over a decade with a previous enterprise that I started. And so we kind of started there. And I started interviewing my friends in the CDFI space and said, look, you guys have always been, for 30 years, you've been on the forefront of economic justice. What's your take? How do you see this? What can we do to support you? How do we all work together to do something about this? And that's really where the train took off.
Well, what's next?
Wow, it's a great question. I think, growth in deeper impact. I think growth in education and visibility, and obviously growth in access to capital.
Well, we're going to help you the best we can on our end. But before I let you go, I want you to explain to our listeners how you go from having these good intentions to actions. So if someone wanted to invest in a CNote product, walk us through how that would work and how simple it is.
Yeah, sure. So you visit us on mycnote.com, so mycnote.com. You will see right there's a button that's Get Started. So you can either surf around and learn more, or you can get started. And when you push that button, what you'll find is an opportunity to engage pretty quickly. The path to investment is pretty easy. Usually it's really about 3 things. One is you select the amount and the product, right? So you may choose, if you are an unaccredited investor, you'll do the flagship fund because anybody can invest in that. If you're an accredited investor, you may choose something else, but you choose the product and the amount. You then create a profile. So that's step 2. Just tell us a little bit about yourself. So we know, who to connect with. And then third is you connect your funding source. So for most folks, that's going to be a bank account. And that's it. It's pretty seamless. Obviously we use encrypted technology to protect your information and to protect the data and the dollar flow, but it really is a 3-step process to get going.
Well, it couldn't be easier. And so we're going to put links to all of this in our show notes. And thank you for shouting out the website address. And we'll make sure that we continue to tell the great story of CNote and the CDFIs that you support. So, Cat Berman, thank you so much for joining us on What Does It Profit?
Thank you so much for having me. My best to all.
This is What Does It Profit? Links to resources related to the issues we've discussed in this episode are in the show notes. More information about our listener referral program and lists of our friends can be found at whatdoesitprofitpodcast.com. In our next episode, Lisa Menza, the Executive Director of the Opportunity Finance Network, whose organization and members are leading the way to finance justice.
Finance justice. To me, it's an acknowledgement that justice, the fight for justice, and here in our country of America, is going to take money.
In the meantime, please rate and review us wherever you're listening, and let your friends know about the show. Quick sharing links can be found on our website. Ratings, reviews, and subscriptions on your favorite podcast platform means so much to us. We would love to hear from you. Show ideas and comments are always welcome. Follow us on LinkedIn, Facebook, and Twitter at WDIP Podcast. What Does It Profit podcast is written and hosted by me, Dr. Dawn Carpenter. The show is produced by Jordan Gaspour. Executive producers are Nate Toby and Barbara Landis. Special thanks to our talented interns, Nate, Niels, Hannah, and Andrew, and our friends at Georgetown University's McDonough School of Business, Kalmanovitz Initiative for Labor and the Working Poor, Business for Impact, the Beck Center for Social Impact and Innovation, the DC chapter of Conscious Capitalism, and Switch and Board Studios. And a special shout out to our friends at CastBox for adding us to their staff favorites list. Before I let you go, let me remind you to never stop asking yourself, what does it profit?